All right, welcome back to my channel. I'm here with another very important person. Go ahead and introduce yourself, Mr. Southside himself.
Like you said, Mr. Southside himself. My name is Robinson Akintade, and I am a life and living benefits advisor by career. That is what I do.
So just to give a little bit of background, I've known Robinson for just probably shy of I'd say probably just shy of a decade.
Yeah.
But we've been close for about a good 4 or 5 years now.
Yeah.
And definitely someone that I look up to, definitely someone who's got their head on their shoulders. And most importantly, when we're talking about this video right now, someone who knows exactly what they're talking about when it comes to the specific topic of life insurance. So just really quickly before we dive into anything more, I want you to break down life insurance as well as why it's important, because a lot of people hear life insurance and they're already backing away because they're thinking all of the stigmas that they've heard over the years.
100%.
And I'm gonna give you the floor. Go ahead.
Okay, so first thing I'll say about life insurance is one of the most efficient tools used by people in general, wealthy people, to build generational wealth. Life insurance is something that allows you to be able to put a specific amount, a set amount of money away into something that is a just in case. Life insurance is a tool to make sure that if something happens to me, my family now benefits in some way, shape, or form. Listen, death is sad, death is uncomfortable, people don't like to deal with death. However, the difference between two people when things happen is the person who doesn't have life insurance is mourning, looking for money, and now they're putting themselves in a financial hole as well as their family. Then there's the other person who mourns and then gets a check and takes that check and takes care of everything that that person would have wanted in life. They give them a final send-off as they deserve, and now they have money to take care of bills in the home, put money away for their kids and their house, pay for cars, put money away for the family, so that now your family is no longer in a bind because somebody was forward thinking enough to make sure that there was enough money to take care of those things. That is really what life insurance is about.
That's a lot, but that was well spoken. So for the people who might be a little dizzy right now, we're gonna break this down to little subsections, okay?
Absolutely.
So the gist of what I got from what you broke down is that life insurance is a way to be proactive rather than reactive.
Absolutely.
So you're taking care of these things that may happen in a worst case scenario.
Absolutely.
And covering those bases so that, knock on wood, should the worst happen, which like you said, it's inevitable, it is going to happen, the proper bases are covered already.
Absolutely. And the thing is, it's not even just about passing away, because there's purposes to life insurance that are not about only if you pass. There are things happen. The reality of the situation is there's a lot of times in people's lives where they're going to miss work because of an injury or an illness or a mental situation. People miss work all the time for things like that. That's part of insurance as well. If I was to break it down into 3 different subsections, there's insurance to protect your family. There is insurance to protect yourself in the case that you are no longer able to be gainfully employed. And then there is insurance, which is used to build wealth for yourself and your family. And there's different solutions in those 3 areas is what I would say.
I'm glad you broke that down, because one of the biggest reasons why I think some people don't show the same urgency to life insurance while they're, like you said, young and it's a lot more attainable is because a lot of people have the mindset of, okay, what can this do for me right now?
Exactly.
What are the perks of this right now? Why am I going to worry about what might happen 50 years down the road when I have to worry about myself right now? Life's hard today. You know what I mean? I need benefits today. So if there's, of those 3 subsections, or maybe more than one, which one of those subsections do you think is the can even pay me dividends now or be beneficial to me now?
Exactly.
What can I do right now that can help me, maybe not today, but maybe a couple like within the short-term future?
Got it. So that is a great question, because because when it comes to insurance, there's all 3 of those different things that I mentioned. There's a purpose for each of the insurances that you can have. So to answer your question, what you would be looking for, and somebody who's looking for more of an immediate or a tangible,
that's the good word for it, actually.
Yes, a tangible idea attached to the insurance, you would be looking for a permanent life insurance solution which had an investment attached to it. Now, there's 2 different types of main insurances when it comes to life insurance. There's permanent insurance and there's term insurance.
Okay.
I'll explain permanent first. Now, let me preface this by saying, permanent insurance is the sexy option. It is the one that everybody wants. Everybody wants. However, not everybody needs it right away. and it's much more expensive than term insurance for a reason which I'll get into. So when it comes to permanent insurance, the gist of it is you have a life insurance component and then you have an investment component.
Okay.
As you contribute to your life insurance, you have a specific amount that you can over contribute to the policy, which will now go into an insurance dedicated to your funds. So it's an investment account on the side of your life insurance. A way to tax defer is by putting money actually into a universal life insurance policy. One, it's going to be growing because it's invested, and then on top of that, you're able to take out the money that's in your life insurance policy. You're able to take out up to 90% of the money that's been accumulated in that without folding the policy, and you can use that whenever you want.
Okay.
So that is something that people will set out early in life, and they'll use to buy their first home. They'll use to contribute to projects they want to do after they purchased a home. But it's also a tax vehicle, so that's the most immediate.
To make sure I'm getting this correctly, so I have a policy set up with you, and I'm contributing, let's just say $50 to it every month.
Yes.
Just for argument's sake.
Exactly.
And let's say 5 years from now, I've accumulated however much money now with that $50 contribution ever so often.
Yeah.
I can take out of that policy to use that towards
Whatever you want. It's your money. We're not
what
gonna
is
tell
the
you.
catch? Is there any repercussions to me taking out from that policy? At
No,
that
it
time?
just means that your accumulated value of cash is now you taking it out like a bank account.
Depleted it.
And
So
you're
let's say at that point I have 200,000 and I want to pull out 50 of it. There's no repercussion, but I just have 150 left over.
Yeah, but you're paying taxes because now it's income.
Okay.
So you're gonna pay taxes on that
50 that I took out.
Take out. Exactly. So
That's
it's just
tolerable.
it's just like income. However, while it's in there and it's growing, you're not paying taxes on all that like it would be in your regular bank account.
I'm just listing off questions that I've either had at some point or I think others might have. Let's say I make my policy and I perish. And when I made the policy at first, I had a list of people who this goes to. How editable is that list? You know what I mean? Things change. Relationships.
No, 100%.
Relationships change.
So there's two different types of beneficiaries you can have. You can have a revocable beneficiary or an irrevocable beneficiary. My policy, I tell every single one of my clients, do not use an irrevocable beneficiary, because once you make somebody an irrevocable beneficiary, that person has almost as much power as you when it comes to your policy. So they have to sign on removing themselves from the policy. You cannot do it without their consent. If she says I'm not coming off, she's not coming off. Same thing happens is, let's say you have one child and you make your child the 100% beneficiary, irrevocable, and then you have more children. Your kid's kind of like, you know what? No, I'm not changing my percentage.
If they don't agree to split it with the rest of the siblings,
they don't have to.
That's crazy.
So never use an irrevocable beneficiary.
Unless you're my parent watching this, leave me as the 100% beneficiary.
So when it comes to term insurance, on the other hand, I'm turning 30 years old this year. I'm about to be 30. That's crazy. But let's say 10 years ago, if I was looking to get insurance at 20 years old, at that point in time, I had just a job, I was in school, I had no child, I was not married, I owned no property. I had pretty much no life insurance need. However, back then I could have probably got a permanent insurance policy for like, $30 a month. And I probably have spent $30 a month on absolute rubbish over the last 10 years. Now,
I can definitely say I have over the past weekly almost.
Exactly. But back then I didn't really need a lot. It would have been really forward thinking for me to have done that. Now, fast forward to now. I have a mortgage, I have a child, I am married, I have an income that needs to be replaced if, God forbid, something were to happen to me tomorrow. So with all of those things being considered, my life insurance need is pretty large. I need to pay off my mortgage. I need to take care of education for my child that's born right now. If I have more children, I add that to the equation. I want to make sure that school money is taken care of. Then on top of that, I need to make sure that my income towards my home, my bills and all that is replaced for my wife so that she doesn't have to
carry that burden.
Exactly. But easily, based off everything that I just said, I could need a $1 million life insurance policy. Now, that's a lot of insurance. If I tried to get that in permanent insurance, that would be wild. But you have to understand, the reason why I wouldn't need $1 million in permanent insurance is in 50 years, many of those things are taken care of. In 25 years,
gone to college.
Exactly.
Your mortgage should be paid off.
Exactly.
And your wife would probably be retired as well, or close to it.
And I've built wealth over time.
Exactly.
My retirement is there, my pension is there, all that is there. So I tell people, term insurance has a purpose. the first question people ask me, so that means if I outlive the term insurance, I don't get anything?
That's what I was gonna ask, actually.
100%, you will get nothing, but you are alive still. Now, because of the fact that it's going to expire, it's cheap. When you're in your 20s, especially 20s and early 30s, is the time to get it, because one, the other big thing about life insurance is, and I won't touch on this too much, but I'm always willing to share my own personal story with my clients. So if you ever,
I kind of want to hear the story, actually.
So pretty much when I had started working in insurance, around the same time that I started working at the current job I work at RBC Insurance, I was employed for about, yeah, okay, yeah. I was employed at the time at my new employer, just switched over from a different employer, also in the financial industry, but I came to where I am now, and I was two and a half months into my job, and I had gotten really sick. I was sick as a result of something that I had already been seeing a doctor about for a few months, but we were kind of doing tests trying to figure out where things were going, because I felt away, but it was nothing crazy. Eventually one day, right before my birthday, my 27th birthday, what had happened was I got sick, and I was admitted to the hospital. I was in the hospital for about a week, and I missed about 5 weeks of work. I was at the hospital for a week, but I was out of work for 5.
Okay.
And I got paid during that time, because the short-term disability usually from your employer is 100% of your salary for the first 3 months of time that you miss. So I came back to work, and I was informed that because I had not completed my 3 months probationary period, all the money they paid me, they had to take it back. And because of the type of employee that I am and where I work, they have direct access to your account. So they took it, even though there wasn't much money to take. Like, they took it to the point where your money can go into a negative.
Yeah, overdraft.
Yeah.
Nah, I'm letting the chopper sing. That's crazy.
So what saved me was the fact that I returned to work. Had it not, the disability plan that my work had wouldn't have covered me. So a lot of people, when it comes to disability, which is a different type of insurance altogether, the way disability insurance is designed to take care of you if you are still alive, but you can't work because of whatever reason, whether it be mentally, whether it be physically, whether it be an illness that keeps you out of work. Disability insurance is the one thing that, unlike life insurance is for your family unless it's permanent, in which you have your own personal benefit. But how I said, 3 different things. There's protecting your family, protecting yourself, and building wealth. The protecting yourself portion is disability insurance, because they think that work takes care of them. The honest truth is, work can take care of you, but that they don't always do so. And I think I've covered most of life insurance to an extent, so we can circle back if there's an additional question from my gracious host here.
Actually, right there, drop exactly how people can contact you to look into these things deeper, because honestly, we're having trouble cramming everything into these videos.
There's a lot.
Where can people contact you if they want to look for more information?
So if you need to reach me, I'm sure that there's going to be a bubble up here.
You never know why I might drop it.
I have a contact page from a social media standpoint that I do use for the purpose of insurances and investments and things of that nature that I do handle, and it's Robinson, ROBINSON.LLB. LLB stands for Life and Living Benefits. So life is obviously like life insurance, and living benefits is things like disability insurance. So that's what the LLB stands for. That is what my title is. So that is where you can reach me. You can DM me there. You can email me there as well, and you can find more of my contact information. I have some tips there. But my whole approach is everybody is different. That's why I can give you guys all the information. We could have an hour-long video, sit here, chill on the couch and have a conversation. But what's relevant to you is going to be different from what's relevant to somebody else. It could be your twin. You guys could grow up in the same home, be the same person. Everybody has a different need for life insurance.
Perfect. So that being said, make sure you guys check out Robinson. Make sure you contact him, get all of your inquiries out there, and make sure you're taking care of yourself. Stay subscribed. Look out for us, and just like I said, he's a jack of all trades. Make sure you holler at him for some wings as well. He be barbecuing.
Listen, this is what I'll say on my little outro.
If you guys remember the hot sauce challenge, This was the guy. This is whose shop we were at getting our tongues burned off at.
And I didn't even try none of them.
Not a
because I don't
single
play
one.
that. I make chicken wings for a living, and they're the best chicken wings in the GTA. If you
get my
need
cosign.
your wings catered, Robin Wings.
Right along the bottom.
You know, I'm a man of the people. I believe that we can just strive to be better every day and live life while we're doing it. So appreciate your time. God bless all y'all. And until the next time.